This podcast is entertainment, not financial tax or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views on Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Tuur, welcome back to the podcast. It's great to have you here and great to do this one in person. I'm really looking forward to our discussion today. We chatted several times over the last 12 months, and it feels like every time we speak, there is a whole plethora of new things to discuss. So I'm really excited to jump into our conversation today. For those that aren't aware, Tuur Demeester is the founding editor at Adamant Research, has really built a reputation over the years of being one of the most prescient minds in the space, and notably releasing some very bullish reports that predict market pivots, typically in a period of time where no one else is paying attention and we're in the depths of the bears. You're back today to talk about a new report that you've released, How to Position for the Bitcoin Boom 2025. Tuur, great seeing you. Thanks for being here.
Good to be here, Connor.
Well, when we last spoke in July, we were over 120K, I believe. When we spoke in December of last year, we were not even at 100K. You look at the landscape today with Bitcoin treasury companies and ETFs, and it just feels like we are entering a different world. My first question for you, in the past, you've usually published these reports in bear markets, but it feels like this one is coming out in more of a mid-cycle with Bitcoin already strong. Why now, and what makes this moment so different?
Yeah, it is absolutely different from my previous reports, and I feel a little more, not in my most comfortable territory. I usually prefer putting it out really in the depths of the bear market, but I did feel like, talking to you guys about whether it was warranted to publish an update, I thought it was worthwhile because the last, 4 or 5 months, there was this hesitation in, I guess you could call it, among Bitcoin investors or Bitcoin observers. There was a lot of bearish sentiment, thinking that, the 4 years have passed, counting from the previous top to potentially this top. Maybe this is 4 years and we got to call it quits and wait for another bull market somewhere, 2 years down the road, 3 years down the road. But actually, yeah, I disagreed this time. I really feel that this is going to be a longer cycle. I think cycles have been lengthening over time, and that this cycle that peaked in 2021, that was an anomaly for being so short. And also, if you look at the global macro picture, I think there's so much tailwinds for Bitcoin. And we might touch on it. There is, of course, higher risk of confiscation than ever before, but I think that shouldn't hold us back from being bullish on the Bitcoin price.
Interesting. And with what do you see the consequences of an extended cycle being? And do you see it? Does that mean you have a prediction for the broader markets to have an extended cycle as well? Or do you see a decoupling at a certain point with, broader equity markets, which you can make the argument we've been in a bull market now for quite a bit of time?
Yeah, 2020 was a stock market crash, and then we saw Bitcoin go down as well. Actually, it was kind of finishing up its own bear market then. So we haven't really seen Bitcoin strength combined with global stock market weakness. So that's kind of a difficult situation to look at. There's no precedence. But increasingly I'm seeing Bitcoin and I think the investment community is identifying Bitcoin as an escape hatch, not just for short-term financial gain, but just for long-term stability, long-term reliability. And so people can buy it with a 5, 10, 15-year horizon, not really worrying so much about short-term prices. So yeah, I think that's really going to keep playing out this cycle. That's why I'm so bullish. And, Bitcoin, I think this is really the institutional cycle. We were a little over optimistic, I think, the previous cycle, including me, thinking like, we're here, the institutions are knocking on the door. But then, of course, we had a a number of rotten eggs with FTX and Genesis and all these problems that occurred, and so I think we needed that wildfire to kind of go through the space. I would of course argue that a lot of those companies were not really Bitcoin companies and more like the crypto companies, but we all got washed out. But yeah, I do think this is we're still going strong, even though we're now down 12% from the all-time high. But if you look at those kind of drawdowns over the past 8 years, that's peanuts. We've had drawdowns of easily 30-40% and still remaining in a bull market.
Absolutely. Yeah, as the joke goes, Bitcoin has crashed all the way to, I guess, 111,000 at the time of this recording.
And if you look at the past 3 months, we're exactly flat. So, is it so bad that we're hovering at 110 for 3 months? I don't think so.
Yeah. Well, and talking about that shift in the market, I know something you've been talking about for a while is market sentiment and conviction of long-term holders. And it sounds like that has only continued. I remember when we were speaking back in December, you had a chart emphasizing the conviction of long-term holders. It seems like that has continued. I guess first question is that the case in your opinion? And is this time different, or are those holders just waiting for a little bit of a higher price before they take profits?
Well, I think it would not be fair to say that all the long-term holders, all the whales, so to speak, are unanimously, in it for the long haul and crazy bullish at this moment, because we have seen a few sell-offs. I think recently 26,000 Bitcoin was moved and sold apparently. So that is kind of, giving people a little pause, but I'm still not seeing the big moves of like a lot of coins that are just moving out to never come back or to not come back in 4 years. So I'm, again, I think it's that we've been conditioned that every cycle needs to be 4 years in sync with the halvening. And I think it makes sense that the market would need some time to work through the idea that, well, maybe that's not going to be the case this time. Because, the broader picture to me is Bitcoin is maturing, it's growing as an asset class. And so by definition, that means volatility should decline over time and cycles should lengthen over time. Because there's no asset class in the world that has 4-year cycles, because they're all much more mature.
Sure.
We're more talking about multi-decade cycles usually in asset classes.
Mm-hmm. Mm-hmm. Yeah, and in your report, you talked about that large scale liquidation, and one of the risks that I think, first off, I haven't said it yet, but fantastic report, how to position for the Bitcoin boom. I think people are going to absolutely love it. What I really love in that piece is that you spend time highlighting potential risks in Bitcoin. I think it's very easy once you're in the space long enough to just assume Bitcoin is already won. But of course, there are always going to be risks to Bitcoin, and it arguably changes every cycle or every couple of cycles. In your report, you outline a number of them, large-scale liquidations being one of them, hacks, confiscation. I wanted to spend some time just talking through those risks, and I think most importantly, of the 5 risks you laid out, which were Bitcoin being seen as a threat to currencies, hacks, large-scale liquidations, confiscation, and just broader market crashes. Of those risks, is there one that you think is most likely or that you're paying attention to the most?
Well, definitely the past week, I'm thinking a lot more about the risk of confiscation, and it doesn't have to be that, literally the government knocks on the door of Coinbase and transfers half of its coins to another address. I don't think that that's how these things work. Usually the government knocks on the door, is like, hey, we want to quote unquote buy equity in your company, and so then we get a seat on the board and we basically get oversight, and the American people get to participate in the upside. And that's kind of the story that's been told about Intel, right? I don't know if people are aware, but just this past week the Trump administration announced that they had taken a 10% stake in Intel, the company. Actually, I didn't read up on all the details about what the motivation was, but so initially it was like, we paid good money for this. We got this this good of a deal for the American people. But then here's, today Trump puts out a tweet saying, in all caps, I paid zero for Intel. It is worth approximately $11 billion. All goes to the USA. Why are quote unquote stupid people unhappy with that? I will make deals like that for our country all day long. So he's taking the other side of the argument, saying I didn't pay anything for it.
Right.
Which then shareholders of Intel could be like, well, that's confiscatory. That's basically taking Intel off of the table as a market player and more into the territory of state-governed companies. And we all know, like, there's a lot of precedent for this. If you on the extreme end of the scale, what you end up with, potentially is that once the government starts owning, say, like a 50% sharehold, amount in a company, they can start to dictate strategic decisions, etc. I would argue that's probably the case at even lower, percentages. And so what you see is that, for example, with oil companies in Latin America, once they get nationalized, the performance declines drastically. So there's always a price to be paid, even though you could argue, well, now it's on the balance sheet of the government, but it doesn't mean that it's good for the investor in that particular company. So long story short, this is a risk, I think, also for companies that hold Bitcoin on their balance sheet, especially if they control all the private keys, because then they're low-hanging fruit, because the government, we all know, is short of money. We're running about a 6.5% deficit. The interest on the debt of the United States government is higher. It's over $1 trillion per year. It's higher than the military budget, higher than the Medicare system. So in order to pay those bills, they have to come up with something. And so I think, these kind of moves, rather than going out into the market and buying the Bitcoin that is somewhere in the world market, if you have 2-3 million Bitcoin that are held visibly within the United States, you might as well make a move on those. So I think the ETFs are vulnerable. I think a company like MicroStrategy is probably vulnerable to those kind of moves. But it doesn't mean that the Bitcoin price will therefore suffer. Right, that's a bit strange to say, maybe, but we saw it as well. Back in 1933, when Roosevelt put out his presidential order saying that we're basically going to start confiscating gold from people, the gold price rose by 50% in the 12 months following. Because if you think about it, the most powerful government in the world is endorsing this asset class. Right. It might not be great for the people in those companies, but as an asset class, it's a massive endorsement. So I think similarly, we have to separate those issues, the worries about particular companies versus what could happen with the price.
It's interesting because it's kind of created a new risk that I didn't even think of before when I saw this Intel story. It's like, what's to stop them from buying 10% of MicroStrategy? Something else I think is interesting is one of the other risks you highlighted is, will governments see Bitcoin as a threat to other currencies? And what I think is kind of an interesting dynamic is, as that threat goes down, because governments are becoming more accepting of Bitcoin, the risk of confiscation kind of goes up because, all right, now they see it as an attractive asset class. How do we acquire more? So it's an interesting dynamic to see play out, but it sounds like from your perspective, it's not really going to impact Bitcoin's long-term trajectory.
Yeah, of course it will impact Bitcoin's trajectory in the sense that different solutions will be found for custody, different strategies will be sought after. People have to take maybe there'll be some kind of discount in certain areas where, custody Bitcoin will come at a discount because you take into account that risk. Right. Doesn't mean that discount will apply to the world price of Bitcoin. It might be to, particular, because like, for example, back in the day when Mt. Gox was, a lot of people pretty much knew that it was underfunded. It didn't have the assets it said it had. And so, the price of a Gox coin was different than the market price. So those things could actually happen. Yeah.
And it certainly reinforces the importance of holding your own keys. And Safety has a really good point.
Well, because people often think, and I've thought about this for a long time, and it doesn't mean I'm right, but in terms of trying to parse this through, even though we might think of Bitcoin as this homogeneous commodity that is, it's liquid, the price should be the same everywhere. It doesn't mean that within the Bitcoin ecosystem that risk is spread out equally, right? There are stories of sugar being confiscated during war times, and the government wouldn't just barge into everybody's home and pick the sugar off the shelves, but they would go to the companies that were storing large stashes of sugar and saying like, hey, this is a national emergency, sorry, we just need this, and maybe we'll confiscate you. They'll have some small print, but usually that doesn't really play out that you're going to get confiscated. So that's maybe something to think about, is like, if you were the government, sweats on your forehead, you got to pay the bills, you're about to go bankrupt, you need money now, you're going to go after the low-hanging fruit. Absolutely. So as a Bitcoin saver, you want to then think adversarially, is like, how do I make my Bitcoin not be the low-hanging fruit? If all these Bitcoin savers were staying on a campground next to the forest and there's a bear coming out of the woods, how do we make sure I'm not the slowest guy to run away? How do I don't have to be the fastest, but how do I not be the slowest?
Sure. And that's a huge difference between Bitcoin and gold, right? The reason Executive Order 6102 was able to happen was because all the banks were centralized, or all the gold was centralized in a handful of banks, as opposed to Bitcoin, where every individual can be their own bank, right?
Not all. That's interesting, because not all the gold actually was centralized like that. A lot of it was, but I believe Milton Friedman in his book did research on this and found out that whoever was holding on to gold coins in their homes never had a problem, even throughout the 30s.
Right.
So they did have, and of course what we also saw is that gold mining companies did extremely well in the 30s, because in a way that's the thing, like a government who needs money, it's not like they all of a sudden declare gold to be evil. It's just they have a need, and it's a pressing need, and so they're going to move on it. And so I think that's maybe also what a lot of Bitcoin critics have wrong, is like, oh, you see, the government is coming after you, like, we told you so. It's like, yeah, but they're not coming after all the Bitcoin equally, and we have a lot of people in the administration, in the government, that are kind of using Bitcoin, and that will continue to do so probably for decades.
Yeah.
So,
well, to take that risk, spin it into a positive, the new presidential administration has clearly, politics aside, clearly taken a much more favorable approach to Bitcoin and digital assets. What does that mean for Bitcoin, for this market cycle? And I'm just curious if your position on Bitcoin being a global reserve asset has changed at all, given the positive signs we're seeing in not just the US, but globally.
I think it speeds up the timeline, really. It really does. Because, yes, certain windows of risk have opened now, but on the other hand, a huge area of taboo has been lifted. If you think, imagine that we're on Wall Street now, and, you and I have had storied careers and all these, in one of the major banks, and all of a sudden, we are presented with a career opportunity to do something in Bitcoin. Well, that's a very different story now versus 3 years ago. Totally different. All of a sudden, it's totally legitimate to because BlackRock's most successful ETF is now a Bitcoin ETF, et cetera, et cetera. There's so many people in the administration that have business dealings in the Bitcoin space, so it's a massive legitimization of the whole space. So I think it's hard to underestimate that.
Absolutely. Well, look, I'd be doing a disservice to the audience here if I had you on and didn't talk markets a little bit and follow up on some of our previous conversations. I know something that you've been focused on, per our conversations, variety of different market metrics, but the strength of the US dollar, looking at the yen, looking at oil prices, those have changed in the last 12 months. The dollar going down, seems like the yen has continued to struggle. Oil prices are down. Can you give us a lay of the land of what you're focused on right now and what these changes mean for the market moving forward?
Yeah, so the big picture that I'm seeing is that commodities are are increasingly in a roaring bull market. I mean, it's been a bit hesitant now. Like if you look at oil prices, I've been surprised at the pump here in Texas that prices have stayed below $3. You know, every time I'm like, this is not going to last. You know, we're gonna go above that. But I think the reason why, for example, oil hasn't climbed a lot more is just that the economy is very sluggish, and so there's just not that much demand. The consumer is really anxious now. People are not spending a lot. There was a lot of money actually spent in during COVID and right after. Like there was this kind of mania happening, and that's, you know, that's hurting now, that people that money went out the door. Debt is looking very bad. Real estate is looking terrible, in my opinion. And of course, you have to be aware that because the dollar is also weak, it doesn't mean that the price charts look all that bad in dollar terms. But keep in mind, you have to correct for real inflation, and real inflation is probably between 10 and 15% at this point annually. Plus, of course, we had that massive inflation wave of about, 40%. You know, everything was, in the last 5 years, prices have climbed about 40% across the board for the regular consumer. And so even if the inflation will go to zero now, we still have, compared to people's income, everything is a lot more expensive. But that's not happening, in my opinion. We're going to go higher. Of course, because Trump is pushing on the Fed to become a lot more dovish. If you look at prediction markets, they're now predicting 95% chance of a lowering of the interest rates by the Fed. So that's extremely likely to happen, whether or not Powell is going or not. So there's, I'm not 100% sure, but I'm starting to think of this period as like the phony war in 1940 in the financial sense, that like everybody knows we're in a crisis, but somehow, the pieces aren't falling yet. We know something is about to happen. If you look at the UK, Japan, US, like all these governments are teetering. So something's about to happen. We just don't know what it is. And, the phony war in World War II lasted 8 months. People knew this was huge, and yet the troops weren't moving yet, and all, it just, these things takes time. Like all these giant institutions are giant tankers that move slowly, but eventually the pieces will fall. And I think the market is just assuming that it'll be like in 2008. It'll just be a market crash, and then you got to be in bonds. But that's very hard for people to process, because they also realize we're in a bit of a bond bear market. So what, should we go back to bonds or cash? Like that doesn't make sense. So Bitcoin is the answer, and one of the answers, I think, and I think eventually, in the next 6 months, people are going to figure that out.
I'm really glad you bring that up, because I think it's a really relevant time for us to be speaking right now with the Jackson Hole meeting happening recently. In your report, you talk a lot about Bitcoin establishing itself as a long-term store of value for institutional investors. With the sentiment coming out of Jackson Hole, it seems like inflation is still somewhat sticky, jobs are worsening, and to your point, it feels like there's an element where the Fed is stuck between a rock and a hard place. How do you see all of this playing out moving forward?
Inflation, stagflation is probably the technical term. It's already happening, where you just have economic stagnation.
And you had mentioned, I think, in your report about stagflation in the 70s, right?
Yeah. That's when people were, economists especially in the 70s, they were so stumped because they thought it was impossible. Their models just did not allow for stagflation to be a thing. Either you would have inflation and growth, or you would have deflation and, languishing markets, but not a combination of the worst of both. But yeah, it's absolutely happening. I mean, the economy it's a necessary thing. Like, we need to go through this because the market has been way overemphasizing consumer products, like Netflix, Amazon, etc. Those valuations are way too high compared to just basic things like electricity and gasoline and food on the table. Like, a lot more money needs to go to those sectors, basic industry. And of course, the threat of war is also going to move that needle towards literal production of, I hate to say it, but weaponry and those kind of things. That's a whole industry in itself. And so in order for that reorganization to happen, we need, we're going to see companies fail, right? We're going to see a lot of companies fail, and then other companies are going to come up. And in the meanwhile, what do you have to do as an investor, as a saver? You try to find an asset or a place to be where you're somewhat insulated from all that turmoil. Because you don't know, you might think like, oh, the money is going to flow to that area, of industry, but you can't tell for sure. Like, especially once the government gets more involved, it's like, who's going to get the government contract? How do you predict that? So you want to be in a place that is more of a politically neutral asset, a scarce asset, ideally an asset that is non-geographical, because that's one of the problems with real estate, is that often local government regulations and action has a big impact on how valuations evolve in any given real estate market. So you can really be a sitting duck if you're stuck in the wrong place at the wrong time. So yeah, again, I'm bullish on gold. I've always been bullish on gold the last 15 years. But I think Bitcoin just has features that improve on gold quite a bit more. So I'm more bullish on Bitcoin.
Do you think it's inevitable that this ends up with turning the money printer machine back on? It feels like politically, the concept of printing money and inflation is so widely known now that it almost feels like politically, administrations know that they need to avoid that at all costs. But you talk about the future and companies failing and dealing with struggles in the market. And it, to me, is someone who's, elementary investor, it seems like they have no way out but printing at some point here. Would you agree with that? Or if not, what does the alternative?
Yeah, I don't see really a way out. It's also like you have to think about it from, the political elite's point of view, is that if they do a hard turn at the wrong time and then the masses turn against them, start blaming them for causing all these problems, well, then they lose the next election, etc. Right. So there's a lot of pragmatical reasons why the money faucet is just probably going to just stay open. And, they don't want the banks to go bankrupt, etc. So yeah, I really think it's just a matter of how much, and like Roosevelt, that was just a literal devaluation. Back then the dollar, of course, was pegged to gold, so they had to admit that we can't pay you this much gold for every dollar anymore. Now it's totally depegged, so there's really no limit, Yeah. But I think that in a way, Latin America, that whole patchwork of countries and political scenarios of the past 50 years is wide open. Like any kind of scenario that we saw there, from devaluations to super high inflation, hyperinflation, it's all on the table because of these giant deficits. And of course, you notice that it doesn't happen in a vacuum. It's not like, oh, we have a financial problem, but everything else is fine. It's like, no, there's an immigration problem. There's military conflicts in the world. There's all these threats that that they're thinking of. Like the inflation is just one little piece of that giant puzzle. So yeah, I mean, it's not the end of the world as well. Like Latin America, people have done okay throughout all these crises. It's not fun, but it does tend to wash away some of the debt. So that's one of the upsides that clearly this administration is aware of. If you weaken the dollar, then the pressure of the debt is going to get reduced. They're hopeful about stable coins because that's a source of demand for these short-term government debts. Mm-hmm. So I think they're definitely going to pursue that hard, but I think Saifedean and others have pointed out that probably it won't be enough to make a real dent and turn this turn the freight train.
I know it's a tough question. I promise we won't hold you to it, but do you have any sense of what the timeline looks for that, of like this ticking clock? How much longer can the Fed hold out and the administration hold out before having to pull an emergency hatch.
There were people in the 80s who were predicting, $5,000 gold in the next 3 years, in the next 5 years. It's very, very hard. I think it's akin to, you can be a firefighter and identify like this forest is so dry,
Sure.
And so just a little spark and set it off, but then predicting when that's going to happen.
Be 10 years before that spark.
But I would be very surprised if it's another 10 years. I think it's somewhere in the next 5 years. I think we're going to see just major. In a way, this election already showed. The past year has been so monumental, and I think that that's also a psychological thing where once people start to just assume change, more change happens because they just not because they're pursuing the right change, but everybody start to position for change, and that's very different from the past 40 years where everybody's just betting on the status quo, right?
Sure.
So I think there is that, what Parker Lewis always says is like gradually, and then suddenly, I do think we're starting to get into that, the armpit of the hockey stick, right?
Yeah.
Where the suddenly is really around the corner.
Well, we certainly live in a different world now where you have the president of the United States, publicly calling out on Twitter the head of the Fed to cut rates and kind of threaten his job publicly to millions of people. So certainly a different world that we live in. Talking about investing in Bitcoin more broadly and in your report, you speak a little bit about asset allocation, and of course, the solution to everything we've talked about so far is buy Bitcoin and hold it. Something else you talk about as the next step is looking at investing in Bitcoin companies. And I know you are not referring to Bitcoin treasury companies, but that is where I want to start because 2025 has just been, when we spoke in December, it was basically MicroStrategy and a handful of others, but that was about it. From my research, I think there's like 60 plus publicly traded companies that have announced a Bitcoin treasury strategy or digital asset strategy in 2025. Some reports, I think, said as high as 80 plus companies. My question is, how do you see Bitcoin treasury companies and ETFs, for that matter, these Bitcoin proxy vehicles, impacting adoption and the typical market cycle flow moving forward?
Yeah, I think it's going to be a major factor. Because if you think about it, what is one of the major tailwinds of every big market out there? It's if the asset can be used as collateral. And that's what we're seeing now. Like these companies realize that, their position in the market is strengthened by putting this asset, this pristine, hyper liquid asset on their balance sheet. All of a sudden their strategic position is improved hugely. Or at least they have that, looking forward, they have that possibility. And, one comparison is real estate, for example. Why has real estate become such an enormous market? Like I keep reporting it in this report that global real estate value is over 50% of all wealth in the world. I can assure you it's not been like that historically, right? Real estate was just a piece of the puzzle. Of course, back in the Middle Ages, maybe land was a high percentage, but then since the Industrial Revolution, real estate was really down there. But the reason why it became such a huge piece of the pie is because people started using it as collateral to then borrow from the government and get very cheap, very long dated loans. And then they could pile back into real estate and buying even more of it. And so that just continues. And so I think we're going to see that potentially on steroids in the Bitcoin space. In a way, MicroStrategy is already showing that because bond markets this is one of the biggest markets in the world. It's well over 100 trillion. I forget the exact number. But pretty much that entire market is now starting to get underwater, where if you correct for real inflation, they're basically all this paper is trading at a loss. So you have these giant funds, pension funds, you name it, insurance companies, who now need to find a way to still have bonds on their balance sheet, but stronger bonds. And so these Bitcoin linked bonds are really a very important answer to them, to this pressing question of how do I beat inflation with bonds. So yeah, I think that's going to be a huge driver going forward. I do think it's also going to possibly create the next unsustainable bubble where companies just go wild, over leveraging, and investors as well think that there's just no end to how much Bitcoin a company can acquire, not realizing we're actually talking about a scarce asset, right? I mean, already 700,000 Bitcoin is on the balance sheet of these Bitcoin strategy companies, while there's probably only 19 million Bitcoin out there. If you correct for losses, maybe even 15 million Bitcoin, right?
Right.
And then how much of that is in the hands of hodlers who don't want to have any exposure to that kind of paperwork or that kind of leverage. So yeah, maybe it's only 5 million that could ever be used in this kind of leveraged position. But then on the other hand, it's extremely attractive because there's just so much money in need for these solutions, so in a way, these Bitcoin strategy companies are really profiting from the existing bubbles that are out there.
Take away the debt instruments for a second. My understanding of one of the main reasons why MicroStrategy was so attractive was because it gave institutional investors that couldn't otherwise buy Bitcoin access for the first time. And now they have a variety of different financial instruments to take that a step further. But we didn't have the ETF then, and now we do, which is opening up access for a lot of institutional investors. Is that dynamic at all changing that need for certain investors to access? I guess my question is, do we need 80 plus different Bitcoin treasury companies to invest in, or do you see at some point some consolidation because it's just not sustainable because of the fact that there's a limited supply of Bitcoin and only so much of it out there?
Well, it does seem that the strategy companies, Bitcoin strategy companies, that there is an advantage to size. Like if you're a big player, you're probably going to get access to lower interests on, all the securities that you rat out, which then gives you more advantage, allows you to grow even bigger, etc. So there is that kind of effect. There is also a regional effect, I believe, where, a company based like in Japan, they have access to particular markets that an American company does not have access to, like in terms of securities. Maybe the same in Europe, right? A lot of European investors can't even really access American markets. So I do think we'll see regional players. I do also agree that we'll probably see a consolidation between these strategy companies. But then on the other hand, if you look at the ETFs, I mean, now it's interesting that technically you can withdraw Bitcoin from the ETFs. That's pretty amazing, to be honest. That's I was surprised to see that happen. Not for, small time investors, but large investors, they can actually withdraw blocks of Bitcoin from the ETF. But still, you're charging fees to store these Bitcoin, and they're not insured. There's no deposit insurance on these Bitcoin ETFs, right? Which is that's a big deal to me. So in a way, it's like if you're going to have, invest in Bitcoin, well, why not immediately go to a strategy company that gives you Bitcoin alpha, gives you Bitcoin denominated upside. And then of course, yes, there's confiscation risk, but that's just part of the package deal. Or you have this like multi-sig, maybe like collaborating with institutions to store your Bitcoin in a more autonomous way. Maybe the ETFs risk falling in between those two chairs. That might be a risk, especially because the giant, most of the giant Bitcoin ETFs, especially BlackRock, it's not exactly the most trusted institution in the world, right? If any institution would cut a deal and they have impairment on their balance sheet somewhere else, like then maybe the Bitcoin side, they can use that as a bargaining chip. There's risks there to think about, I think.
Well, as I speak with clients all the time about, there's trade-offs with everything.
Yep.
And one of the benefits of these ETFs or other vehicles is certainly the convenience aspect and
Absolutely.
liquidity.
Yep.
But the downside is you take on these other risks, and that's why it's so important to have at least a good chunk of your stack of Bitcoin in self-custody.
I would add that I do think it's an amazingly positive evolution, that what we're seeing now is that you can basically allocate all across the risk spectrum now while not leaving the Bitcoin ecosystem. Whereas before, what we saw in the 2017 cycle, 2015 cycle, 2020 cycle is that people who had more appetite for risk, they would go to altcoins and they would get burned on all these pump and dumps. So it doesn't mean that
like
you
a
can't.
safer alternative.
Yeah, you can still lose your shirt in Bitcoin, but at least, I think it's encouraging to see that people are starting to understand that this is really the game in town. This is the long-term game.
Certainly people have different opinions on the ETFs and strategy and all of their different investments. But I agree with you. It seems like there is a financial ecosystem building even within Bitcoin, within traditional finance. And so the adoption is certainly great to see. That's Bitcoin treasury companies or digital asset treasuries, or as Nick Carter says, Bitcoin access vehicles, which I think is the one I'm going to be going with. I want to talk about Bitcoin companies, though, which you also mentioned in your report, in terms of portfolio allocation and thinking through, all right, I have my stack of Bitcoin. Maybe I want to step out on the risk curve or get slightly different exposure. And you talk about Bitcoin companies that are natively building on Bitcoin, and how to think through that. And I wanted to spend a few minutes with you, your perspective on investing in Bitcoin versus a Bitcoin company, and how you think about the analysis of that.
Yeah, so what I emphasize in the report, first and foremost, is yes, like start with Bitcoin first. Like this is an amazing, unique opportunity to actually buy the protocols, the equivalent of buying shares in TCP/IP without needing to go to all these internet startups, right? That's just so incredible that you can buy the protocol. But yeah, so and then if you are going to diversify into companies, there's a few notes just based on my own experience. You can't cut corners. Like you need to do thorough due diligence, and so either you have some special skills in that area where you can actually talk to the startup entrepreneurs and that's great. Maybe you can join a syndicate and have someone that do that for you, or you can work with a VC fund or something like that. But even then, it's like there's no shortcuts. You have to then do diligence on that VC firm, right? You have to vet the people. There's no way around to eventually vetting some people. So do that. The other suggestion I have is that first mover advantage is overrated. You need a company that has know-how, integrity, perseverance, and it's okay if they arrived a bit later to the party. Strategic advantages tend to evaporate very quickly because it's a global market. More than almost any other industry, it's a global marketplace. So what you need is just the very best people who execute consistently over a long time. That's very difficult to do. So, and we've seen it several times where latecomers actually ended up taking a lot more market shares, especially because the opportunist early companies, then they often get burned in the bear market, right? Mm-hmm. So that's just something to keep in mind. I would also say, especially in light of what we talked about earlier, geographically diversified. Like think about geography. Like where are these companies going to be active? If they're in a certain geography, can they easily move? Maybe not. That's fine. But then just keep in mind that political risk, we can't deny is a real thing today. So just try to not be overly concentrated in just one jurisdiction. If you're an American, you might even consider, focus your efforts on startups outside the US, just to kind of like offset some of the risks that you have here locally anyway. Timing, for example, I remember there was a lot of hype about Lightning early on, the Lightning protocol. Mm-hmm. A lot of money went to the Lightning, relatively a lot of money went to Lightning startups. And some of that was probably a little premature, similar to how, in the 90s already, people were excited about video streaming. And all those companies disappeared because it was just simply too early. So just keep in mind the bigger picture. Usually when I invest in a startup, I have like a kind of an idea of like a macro idea that I'm excited about. And then gradually it's like, oh, this this company fits in my macro thesis. Like that's usually how I do it. Like if I'm like for the longest time, I've not been excited about, Bitcoin for retail transactions, like, Bitcoin for buying coffee and things like that. So I've never invested at all in that space in the Bitcoin, even though I think it's admirable, it's important. I just think timing wise, it's not the right time to do that. And then the last point I make is about leverage and third party risk, which is more about, those strategy companies. But you might also consider that because increasingly, maybe even startups that are in the mining space might be like, oh, we're going to put Bitcoin on our balance sheet and we're going to, just think that through. Is like, what kind of leverage are they talking about? What's the risk? And then maybe finally, like margins, like just think about, what kind of, like, is this company creating or at the beginning of a new emerging marketplace, or is it entering an already pretty crowded space? Like a company who's new at, for example, building a Bitcoin mining machine today, after, people have been building those machines for 10 years, might have a harder time actually eking out some market share unless they have some very special qualities, right? And then that's something to think about. But yeah, I would definitely, I wouldn't like rule out any of the parts of the Bitcoin ecosystem out of hand, because eventually Bitcoin is just taking over the world. So I think there's no invalid theses, but maybe think about timing, think about geography, think about competition, and the margins that people can make, and definitely also think about what percentage of your portfolio will you allocate to these startups in general. You might be excited about, but keep in mind your money is going to be locked up for potentially 10 years, in these very illiquid assets. So just keep that in mind. Compared
to Bitcoin, which can trade 24/7, 365. I'm smiling as you're going through all of this, because as you're walking through this process, I'm like, I'm just going to buy Bitcoin, right? But I'm not an institutional investor either. You mentioned when you're looking at companies.
Maybe one more thing, and I've seen people do this successfully. One reason to actually do have exposure is more from in a way, a market intelligence point of view. It's like, okay, we have very significant Bitcoin exposure already. Maybe we're a large fund or a family office or something. We're going to invest in these startups because they have their finger on the pulse. They know what's going on. I can call those guys.
You get connected to the community.
It can be really powerful to have that. And then you're just less, nervous about how well they're going to perform financially.
Sure. Yeah, that's really interesting. You mentioned when you're looking at these companies, you use your macro view and use that to try and pinpoint. Is there a company or example that comes to mind, or type of company that you think fits with your macro view right now?
Well, I was excited about, I think it's like 3 years ago or 2.5 years ago, I started talking with Rob Hamilton from Anchorwatch. And so Anchorwatch is a company that does custody insurance for self-custody Bitcoin. It sounds like a contradiction, but it's actually possible. And so when he was kind of explaining to me what they're going to try to achieve, I was very excited immediately, because I knew it's a huge unexplored space. Is how do you do insurance of Bitcoin, custodied Bitcoin, like a third party Bitcoin? How do you insure that? Because there is no FDIC in Bitcoin.
Right.
We need insurance. So just based on that, I was excited. And so to me, that's an example of like, okay, and they have become the first mover actually in that space. They got a contract with Lloyd's of London. And so that's an example. Just, in a way, it often helps to know a little bit about financial history and like kind of go back to, including the 19th century, mostly the 19th century, just gold standard, like study the gold standard. Whatever institutions were there, we're probably going to want to resurrect for the Bitcoin space. Like life insurance is another example.
Yep, absolutely. Well, one of the things I love about you, Tuur, is that not only do you always come prepared with a plethora of charts and market knowledge, but you always spend the time to tie it back to Bitcoin and really the core message and values of Bitcoin, which I think is very rare in the space, where a lot of people give their market predictions or price predictions, but maybe they don't really care about Bitcoin the way that certain individuals like yourself within the community do. You had a tweet today, I think, that was the painting of a golden calf. And you said, Bitcoin is a side quest. My first question for you, just talking more philosophically here, is how you think about Bitcoin's role, rather, in your life. Has that transformed, or is that changing at all?
Yeah, definitely. It's changed. I think there really is like the goal. I didn't mean it like facetiously. Like, there is a risk that, you get into Bitcoin and you start to think it's the answer for everything,
Mm-hmm.
and you get very personally tied into it, and then, you know, there's practical disadvantages to that, which is that you're going to get more blinded in a bull market. You're just going to
Sure.
not have enough of that healthy indifference. You kind of want that slight apatheia where you're just like, we'll see what happens. And but yeah, I do think, to me, it has changed how I think of Bitcoin. I think maybe I've just grown a bit more modest in terms of, the kind of problems that Bitcoin can solve, because you just see that, people get hacked, people get kidnapped, people, wars still continue even though Bitcoin is bigger than ever. And people might say like, oh, but eventually, once we have a Bitcoin standard, it's like, well, on the gold standard, there was a lot of wars, So, I just think that it's a human invention, it's a pretty incredible invention, but it's still it's in line with the technological inventions that we've seen in the world over the centuries. So yeah, I mean, it's I guess for me, it feels like the right thing to do, and I think also I have to be grateful actually to Bitcoin for teaching me a lot of this stuff, because of how wild these cycles are. If you're overly invested in it, you just get beaten up really badly. And then you're like, why do I put myself through this? Like, why am I so invested in this? Maybe I need to learn to, have a bit more distance. And also there's that interesting phenomenon where you realize that actually the universal aspects of Bitcoin, just, the way the technology works and the ideas behind it, they don't change at all with the volatility in the price. So those are two phenomena. We have the kind of the emotional volatility of the world, and then we have just things that just are. And I think that's just been, being in, it's like a mental gym or something that you're just constantly working in. So
Absolutely.
I don't know if that answers your question, but definitely, I've evolved over time.
Yeah, it did, and I appreciate that perspective. Having been in the space a lot longer than myself, it's interesting to see your perspective on where Bitcoin fits in your role, or in your world, rather. In the final part of the report, you share a piece of art titled "Power of the Piece" by an artist I'm not even going to try and pronounce. I put it into Google and they said it to me. I was like, I'm not saying that. Power of the Piece. It's a beautiful, beautiful sketch. And the messaging there at the end, you have a little blurb and you're talking about what the image shows, which is taking swords and weapons and turning them into sickles and plowshares. And I thought it was a very poetic analogy, and I wanted to end here by having you just expand on that a little bit, and what the connection is to Bitcoin.
Yeah, I mean, swords into plowshares comes from the Bible directly, and so to me the idea is really that is shown in that image. Is that, yes, you see, on the right side of the image, you see war and all this in the industry of war, and then there's a giant furnace in the middle, which is smelting the metal, and then on the left side you see the people building farms and cities and those kind of things using their plowshares. So the idea is, yes, you can use technology for good, and what I think the overarching message is is that you see all these figures there, and they're representing the virtues. So you see the virtue of fortitude, and the virtue of honesty, and the virtue of justice, so all these virtues. And so in a way, it's saying that yes, we can use technology for good, if we keep in mind the importance of leading a virtuous life, like pursuing these moral virtues. And so to me, that's like bringing it all together. It's like, yes, like, that I love Bitcoin, but we have to keep in mind that we're still stewards of this technology, and we have to decide how to use it.
Well, I appreciate, again, after 10 plus years in the space, you're still making the extra effort to think so insightfully and poetically about Bitcoin's role in the world. The space is very lucky to have you. Tuur's report, How to Position for the Bitcoin Boom, is out now. It is incredibly insightful and a one-stop shop for everything that you need to know for where we're at in the current market cycle. Tuur, thank you so much for your time being on again. It's always great to see you. And until next time.
You're welcome, Connor. My pleasure.